Adobe had a strong first quarter. We achieved $5.18 billion in revenue in Q1, representing 12% year-over-year growth. GAAP earnings per share for the quarter was $1.36, and non-GAAP earnings per share was $4.48, representing 18% year-over-year growth. In addition, we've innovated by delivering generative AI directly in products with releases in Adobe Photoshop, Illustrator, and Express across both desktop and mobile. AI Assistant in Acrobat and Reader unlocks the tremendous value of the trillions of PDFs around the world. We're successfully monetizing our innovations with particular strength in Q1 in the enterprise segment across our digital media and digital experience businesses.
With AI Assistant, we're combining the power of generative AI with our unique understanding of the PDF file format to transform the way people interact with and instantly extract additional value from their most important documents. It instantly generates summaries and insights from long documents, answers questions through a conversational interface, and provides an on-ramp for generating emails, reports, and presentations. We will monetize this functionality through a monthly add-on offering to the hundreds of millions of Reader users, as well as the Acrobat install base across individuals, teams, and enterprises. Acrobat Web continues to be an incredible source of customer acquisition, with monthly active users up over 70% year-over-year and surpassing 100 million users in Q1. Increased viral adoption through link sharing and stakeholder collaboration drove over 300% year-over-year growth in the number of PDF files sent. Key enterprise customer wins include Berkshire Hathaway, Merck Sharp and Dome, Northrop Grumman, Porsche, and the U.S. Navy.
In Q1, Adobe delivered another quarter of double-digit top-line growth with robust margins that result from product leadership, strong execution, and financial discipline. GAAP EPS came in lower due to the billion-dollar payment resulting from the termination of the Figma transaction. Absent the termination payment, our cash flows from operations would have been $1 billion more, and GAAP EPS would have been $2.19 higher. In Q1, we entered into a $2 billion share repurchase agreement, which effectively exhausted our prior $15 billion authority. As a result of our strong trajectory of growth and profitability, we are announcing a new $25 billion share repurchase program, which demonstrates Adobe's continued commitment to returning capital to our shareholders.
Thanks, Shantanu. The magnitude of the beat this quarter was roughly half the absolute beat you've had in past quarters, and then the guide obviously lower for next quarter. I think everyone's asking, is this some type of AI headwind? Is this macro? Is this execution? Can you just comment on what you think you're seeing in the current quarter?
Yeah, happy to, Brent. And again, I'll reiterate that, as it relates to us taking our targets pretty seriously. I mean, when we guided to $1.9 billion for the year, I mean, we had factored in both, as David mentioned, what was likely to happen in the pricing and how that rolls off, as well as the product roadmap and, when AI Assistant and Acrobat would be available, when, Express, which is now in beta, would be available. So I think it factored in all of those. I feel really good both about the product delivery as well as the way monetization's turning out. I mean, it's clear, I guess, a little bit from, what we've seen, that expectations were perhaps a little higher, both in terms of, what we would guide for Q2. But, I'm really optimistic about what we have done.
Maybe for both David and Shantanu, can we just talk a little bit about how you think about the market impact that generative AI can have in the video editing market, and how maybe Firefly can participate in that trend?
I think, some of those video advancements that we have seen within Adobe have really addressed some of those hard problems. Big picture, though, video, I think, will be even more of an accelerant for editing applications. More so in video, there's going to be an accelerant for people saying, how do I get an on-ramp as it relates to, using text to video, and then, edit that using our application. We're also partnering. I had a really great conversation with Jensen recently about, what we can do as they are investing in video. Certainly, he would love to partner with us. And so really great advances, but net video is going to be even more of a need for editing applications in order to truly take advantage of generative AI.
Hey guys, thanks for taking the question. And my question is very simple. Can you reiterate, not update, but reiterate the guide that you gave in December for digital media ARR in net new specifically for this year, and how we should think about the second half versus first half tailwind, headwind around pricing?
Yeah, so we take our guide seriously. Q1 played out as expected. It was ahead of where we were last year. Our Q2 guide is ahead of where the guide was in Q2. We're talking about acceleration into the back half of the year. If I didn't feel like our full year guide was achievable, we would have a different conversation. We're confident in the targets that we put out there, our ability to meet them. If there's an opportunity to do better, we certainly will. So we feel good about where we sit in the first half. We feel good about the momentum into the second half.